The notes on sustainability are extensive by its very nature. So what I decided to do was to create some mind maps. I've created 5 mind maps. You can see my beautiful drawing here. And we're going to go through them so that I can link the topic of sustainable reporting and sustainability assurance, ISSA 5000, to cover it totally so that no matter how the examiner throws the question at you, you will have the full picture. So listen very carefully. Let's start with the story. Everything begins with sustainability topics. Sustainability topics are divided into 4 categories. The tree represents the environment. That little fella there represents social issues. This money in the bag, when I was looking at it just now, it looked more like a dress, doesn't it? But it's supposed to be a huge bag of money, thinking about the economic issues. And the last one is a teepee, Red Indian teepee, or wigwam. That one speaks about cultural issues, indigenous people, and all that. So these sustainability topics will then eventually find its way into the sustainable report. So how do you know what sustainability topics would be relevant for this client company? If you're a company, the question to ask will be, do these topics have a significant financial effect? So when you're thinking about financial effect, I'm thinking about revenue going up, revenue going down, costs going up, costs going down. Whether your asset value is going to go up, asset value is going to go down. Liability going to go up, liability going to go down. Capital access going to increase, decrease. Long-term value creation, is it going to create or destroy value? It doesn't matter which direction. So if any one of these topics, there's tree, the person, the bag of money, and the TP, if they have a significant financial effect, then that is what we call financial materiality. It is material financially. It has got an effect in terms of dollar value. It could be a significant increase in your revenue. Let's say, for example, if you're a hotel and then you're a totally green hotel where your carbon footprint is totally zero, wow, that will help you earn more money, because a lot of people want to have a holiday in a hotel that has got a 0 carbon footprint. Okay, I'm not saying that the hotel does not have any electricity, but maybe they're using green electricity, for example. So that will help them to get a particular market share. So anytime any of these topics have a significant financial effect, then that topic will be financially material. It's called financial materiality. Why? Because it creates either a risk or an opportunity with a potential financial impact. If the answer to that is no, the topic might still be important to stakeholders, and this is called impact materiality, but it's not financial materiality. So what's the difference between the two? Financial materiality is where the tree or the people, the environment, whatever, is going to have a financial impact on the company. Maybe because of the company's behavior, if you destroy the environment, you're going to have more carbon tax. Maybe you're even going to have a higher rate of corporation tax. Maybe subsidies will be removed from you. If you're behaving well, maybe you're going to get more government grants. Maybe because of the effect of the company on the environment, maybe the regulation will say you cannot use diesel machines anymore. Then the machine will have to be immediately written off. Why do they use the word materiality? I'm thinking is because of that. The financial impact is material. Now, sometimes a company can also have an impact on the environment. So I put a tree there, and I've got a river there, and I've got some fish there. You can draw your own pictures. So one is called financial materiality, and the other one is called impact materiality. So the word materiality is just the meaning of the word effect. The company will decide then for whatever area that has got a financial effect, that will go inside the sustainability report. If it does not have a significant financial effect, it will not go inside the report. Now, down here, I said the topic may still be important to stakeholders, and that is called impact materiality. Okay, so let's go into the sustainability report. The way the report is presented will depend on the framework. Like you've got the GRI framework, you've got the integrated report framework. It's just a format. Now, when you look at the content of the sustainability report, it will be divided into 2 aspects. I know here it looks like it's 3 lines coming out, but basically 2. Let me explain. Sustainability reporting tells two stories. The first one is the impact of the environment on the company, which we call the financial materiality, and the impact of the company on the environment, which we call impact materiality. So the sustainability report will tell you two stories. One is about the impact here and the impact here, first part of the report. And can you see the middle arrow here? It's about, okay, so the company is affecting the environment. What are you going to do about it? Or the environment is affecting the company. What are you going to do about it? All right, let's go back up here. So you've got the impact materiality and the financial materiality inside here, which is considered to be one thing. It's about financial materiality and impact materiality. And what are you going to do about it? So the content of the report will explain the company's aims, the company's strategies, the company's targets, and the actions that they're going to take to deal with sustainability issues. Where there's issues, can you see the little arrow here is in the middle here? So if the environment is affecting the company is affecting the environment, there are issues on both sides. So what is the company doing about it? I want you to memorize these 4 words: aims, strategies, targets, and actions that the company is going to take. This is very important. In a sustainability report, if these things are missing, because the sustainability report is supposed to have these 2 things, right? So if any one of it is missing, then something is wrong with the report. So as an assurance provider, you need to watch out for that, because that will impact your opinion. On sustainability reporting, we are also thinking about, why do we need sustainability reporting? That could come out in your exam. There are 3 main reasons. One is because it's mandatory. Like in Europe, for example, sustainability reports are mandatory. So that's why they do it. Or if it's not mandatory, sometimes the stakeholders are demanding it. So you're under pressure to produce it. Or there's no mandatory requirement and the stakeholders are not asking for it, but you want to provide that report as a form of competitive advantage, because if you can show that you are more green compared to someone else, you might get a bigger market share, knowing that consumers nowadays are very environment and climate conscious. This is why the sustainability reporting is taking place. So if you only have a sustainability report without the sustainability assurance, no one is going to believe your report, because anybody can write anything, right? Therefore, you have the need for sustainability assurance. So why do you need sustainability assurance? Because the sustainability report has got 2 things, and we want to make sure that the report is telling the truth. It's not misleading stakeholders. It's not violating the regulation. So what have you learned so far? The sustainability topics in general, there are 4. But which goes into the report, you have to ask this question first. And the ones that have got a significant financial effect, that is what you call financial materiality. But the company also has got an impact on the environment, and therefore that's called impact materiality. Okay, let's go to the next diagram. Sustainability reporting. So how do you produce this sustainability report? The first step is to consider the cares and concerns of your stakeholder, this company that's producing the sustainability report. What are their cares and concerns? What is it that they're worried about? And here, when you're talking about stakeholders, we're talking about investors as well, yeah? Investors who invest in the company, and maybe other stakeholders as well. What are their cares and what are their concerns? And that leads us to a concept called double materiality. So what is double materiality? It is this picture here. How the environment affects the company and the company affects the environment. That's double materiality. So once you identify the cares and concerns, then you can dig deeper to find out the financial materiality and the impact materiality. Next step will be to prioritize your double materiality, because not everything from here is going to go into the report. You have to prioritize which one is the area which your stakeholders are the most concerned about. Remember, the stakeholders are investors, and it can be the environment and other stakeholders as well. Okay. After prioritizing, then they need to disclose and justify. They have to justify. What do you have to disclose? The double materiality. What is the double materiality? This one. The financial materiality and the impact materiality must be disclosed. And when they disclose this, they have to explain why certain things were included, because earlier you prioritized, right? So why was this included and why were the others excluded? You have to provide the justification in that sustainability report. And you also have to disclose, what is this? The 4 things just now, I missed out writing here. So it will be the aims, the strategy, the targets, and the actions. Can you just add that in here? The 4 areas. So that goes inside the report. Now, on sustainability reporting, there are some challenges. Maybe the examiner will ask you about some of the challenges, which is inside your syllabus anyway. Is that, oh my goodness, there's so many frameworks. Can you imagine what it would be like if, as accountants, you got so many formats for P&L and so many formats for balance sheet? Which would you choose? So that becomes a bit of a headache. And even if you choose the framework, so I want you to note there are 3 thick green lines. This one is a thinner green line. After you choose the framework, then suddenly there's a rapid change because this area of sustainability reporting is changing so rapidly. So even if you can find a framework, the regulation might change that causes the framework to change. Big headaches. So this is a challenge for companies. And defining materiality, what are we talking about here? The double materiality. This is not like all we have to do is just use the percentages based on the financial statements and that's it. Voila, we've got it. But here, to try and find the financial materiality, I mean, the client also has to prioritize. So finding it, prioritizing it, wow, that's going to be a bit of a headache. And another one is hard to collect the data. So in order to collect the data, first of all, they've got to conduct the materiality process. This is your double materiality, this one, double materiality. All of this is actually inside your notes, but I think putting it in a diagram sort of links things together. I think it's a little better. You've got to build internal controls, just like the accounting system. You've got internal controls, then you've got the accounting system. They're not synonymous. The systems here is a system of collecting the data, and then you start measuring. Okay, so these are some of the challenges. It's hard to collect the data. There's a lot involved. So you not only have an accounting system, now you've got to have another system to collect the data for your sustainability reporting. So this second mind map here is about how to produce, the steps involved, and then here, what are some of the challenges that the company might face? Go on to the third one. Now we've got sustainability assurance. Your examiner can throw in an acceptance question. So because it's acceptance, ISQM1 comes in. ISQM1 is applicable for both audit and non-audit assignments. So we will have CCEI, competence, capability, ethical issues, integrity, and ethical values of the client. ISSA 5000, the standard here, talks about preconditions. It is called preconditions because you cannot accept the assignment if the preconditions are not met. So what are the preconditions? There must be that subject matter that is identifiable and capable of measurement. Because if you can't measure it, then how are you going to provide assurance on it? How are you going to collect the evidence for it? Okay, so when you talk about subject matter, it goes back to the subject matter of the sustainability report. Remember, I told you that there are 2 major areas: financial materiality and impact materiality. And the aim, strategy, targets, and actions. That will be a subject matter. And the subject matter must have suitable criteria. And the criteria here, we're thinking about frameworks and standards. Just like in financial reporting, we've got frameworks and we've also got standards. Without that, very hard to measure. Like for environment, let's say you're dealing with carbon emissions, you have got rules on scope 1, scope 2, and scope 3 emissions. How to measure carbon emissions in metric tons, for example. So there needs to be the suitable criteria. So the first precondition is that there must be a subject matter, and the subject matter must be linked to the suitable criteria. If there is no suitable criteria, you cannot provide this assurance because one precondition is missing. So this is a thick green line. Then you've got another thick green line here, where we're saying another precondition is there must be the management responsibility, meaning that management must prepare the sustainability report, not us. And they must give us access to information so that we can find the evidence. And there must be the agreement on the scope and objectives. What are we talking about? The topics. Not all topics will be in the sustainability report. Management could choose the environmental, maybe social, maybe on economic, and maybe cultural, maybe only one of them, maybe all 3 of them. Is really up to the company. In the sustainability assurance, what kind of exam questions are you going to get? Acceptance, decision, just like you had it in the fizzy soda question. What if when you're doing this question, you miss out the preconditions, your full answer is based on CCEI, you'll still get full marks. But what I imagine next time the examiner could say is that you have already cleared CCEI. Then what are you going to do? So you cannot skip the preconditions. So your exam question could be on acceptance, and it could also be on ISSA 5000 examinable from September onwards. Now let's go into sustainability reports and ISSA 5000. Sometimes I know it looks like a little bit of an overlap, but I couldn't smash everything into one diagram. It will be very confusing. Okay. So sustainability reports, you know, has got subject matter. Subject matter has got two stories, remember? One is about this, which we call double materiality, the financial materiality and the impact materiality, and the aim, strategies, targets, and actions. Double materiality is actually about two viewpoints, from the company viewpoint and the other side viewpoint. That's all. That is one part of it. You must understand this. Yeah, this is the content. Now, when it goes into the report, how will it be written then? Will it be written like this one? No, it will be written like this. So sustainability reports will contain both numerical metrics, numbers, maybe dollar value, like for example, CO2 emissions. What is that? The company impacting the environment. That's supposed to be a tree there. You can do your own coloring. So can you see here? Numerical metrics, how the company affects the environment. And it might also provide you with information on your renewable energy usage, which is what? This one, that you're doing something, that maybe 80% of your energy is brown energy and 20% of your energy is green energy. So let's start again. This is the subject matter, but when it goes into the report, it will now be divided differently into numbers and storytelling, numerical metrics and narrative statements about climate policies of the company, diversity commitments, you know, whatever. So that is on the area of sustainability reports. So are we okay with this? This is the subject matter, but when it goes into the report, it will be presented this way. Now let's go to ISSA 5000. ISSA 5000 is a standard that can be applied by anybody, whether you're an accountant or non-accountant, as long as you subscribe to an ethical code that is the same standard as the ISSA code. So if you are fantastic with this sustainability reporting, but you don't have a professional qualification, and if you don't have a professional qualification, you're not going to be subscribing to an ethical code, then you cannot create an assurance report under ISSA 5000. When we come up with the report, we will always say this report has been prepared in accordance with ISSA 5000. So that's the important thing. It must be a professional who subscribes to an ethical code, their own ethical code that at minimum has got the same standard as the ISSA code. This standard says you can carry out assignments under two kinds of assurance, reasonable assurance and limited assurance. Reasonable assurance is more work, more substantive work. Substantive work does not mean no test or control. It's just a lot more work. And do you need to have test or control? Yeah. Why? Because here, can you see there was an accounting system here, an environmental management system here. So there will be test or controls. So if you do more work, then the opinion can be issued positively. If not, limited assurance is lesser work and your opinion will be issued negatively. Nothing has come to our attention to show that. Yeah, I'm sure by now you know the difference between reasonable and limited assurance. So in ISSA 5000, you start off with planning. I mean, I'm sure they do a lot of stuff. Okay, I'm just simplifying it here. They will do planning. And just like us, in ISA 300, when it comes to the audit strategy, what does the audit strategy involve? The scope, timing, direction of the audit, and the resources. So I want to have a look at direction. What is direction? Direction, ISA 300, contains two main things. One is the audit approach, and the other one is materiality. So I'm bringing it here into this sustainability assurance by telling you that this direction here is talking about our assurance approach and materiality, but this time it is called bifurcated materiality. Here it's called double materiality. Here it's called bifurcated materiality. They're different. Double materiality is about two viewpoints. And these two viewpoints, when they disclose it, will be disclosed this way, numerical and narrative. So bifurcated materiality is about how you identify the misstatements in the numerical and in the narrative statements. So bifurcated materiality is about the two disclosures. Which disclosures there? There's two here. So bifurcated materiality, we have got a materiality for the quantitative disclosures, which is this one. And we've got another materiality for the qualitative disclosures. So for quantitative disclosures, for example, this ensures numerical data like emissions, recycling rates is accurate and meets the materiality thresholds expressed in percentage points or in absolute figures. Example 1, the company claims 40% of the packaging is biodegradable. But when you check, remember, you're the assurance provider. When you check, you've got to check the company is claiming something, but when you check, it's actually only 35%. And you have already set a materiality threshold of 3%. Where did the 3% come from? Professional judgment. So maybe in the exam question, the examiner might tell you what is the percentage that has already been set. So then you need to know whether the misstatement here is material. So the difference between 40% and 35% is 5%. So is that 5% differential material? Yes. Why? Because 5% is more than 3%. You are only willing to tolerate up to 3%. What if it's 3.1? Well, 3.1 is more than 3. It's material. Ask the client to change their claim. Otherwise, we're going to issue a bad assurance report. Next. The company reports, here we're only dealing with quantitative disclosures, yeah? The company reports CO2 emissions of 500,000 tons, but the actual emissions are 550 tons. And what if you have set a materiality threshold of 3%? I mean, this one is packaging biodegradable, and this one is emissions, and still 3%. It doesn't have to be 3%. It's up to the assurance provider. I just happen to put it as 3%. Okay, so it doesn't have to be 3%. The percentage here will depend on the sensitivity. Like, you might be willing to tolerate when your kids prepare dinner if they're not particularly clean. You close one eye, yeah, okay. But how about your husband's fidelity? Are you willing to close your eye, one eye, half eye, quarter eye? So there, the materiality threshold will be 0. So depending on the situation, your materiality for different things will go up and down. So the misstatement here is 10%. How do you get 10%? The difference between 500,000 and 550,000 is 10%. So the misstatement there is material. Why? Because 10% is more than the 3% that you're willing to tolerate. So take the information that is within the question. I don't think the examiner is asking you to set the materiality threshold. Maybe there'll be a knowledge-based question. So if it's set, just follow it. It has to be set. The examiner cannot expect you to set it. This is not like brown materiality. Brown materiality is different because we've got the percentages, we've got the benchmarks, we can derive it. Here we don't. There's nothing straightforward, so a bit difficult. Now let's have a look at quantitative also. A company reports Scope 1 and Scope 2 greenhouse gas emissions as being 500,000 metric tons. What is Scope 1 and Scope 2? Scope 1 is your direct emissions. Scope 2 is like you manufacture a car and other people are driving it and contributing to emissions. So that is Scope 2. Okay. Scope 3 is your suppliers' emissions and your downward emissions. So it's more difficult to quantify. Okay, so a company reports Scope 1 and Scope 2 greenhouse gas emissions as being 500,000 metric tons of CO2. There's an E there, CO2E. Yeah, I mean, that's their measurement metric. The assurance provider sets a materiality threshold of 5% using professional judgment, meaning that 5% multiplied by 500,000 is 25,000. So anything more than 25,000 is considered to be material already. So if an error of 30,000, when you do the actual work, when you measure it, and then you find out, oh, the error is 530, not 500,000. That means the error of 30,000. So that will be reported as a misstatement. Is this the same as the earlier one? Yes, it's the same. The only difference is that I've changed the language slightly. There, we were looking more at the percentages. Here, we have already converted the percentage to the 25,000. And if the error is 30,000, then 30,000 is more than the 25,000. That's all. It's the same concept. Yeah, it's the same. Gender pay gap. The company reports that female employees earn 95% of male employees' salary. It's terrible. We do the same work and then you want to pay us less. So the assurance provider did some work to find out, and then he finds out that actually in this company, women earn only 92% of men's salary. So there's a gap. There's a gap of 3%. How do you get the 3%? That's what they claim here, and this is actual. So they're out by 3%. And because this is such a sensitive issue, the assurance providers considers even a 1% deviation as being material. So then they will have to force the company to change their report. Either that or to increase the woman's salary to be 95% of the men's salary. This gender pay gap is very real, okay, unfortunately. Okay, another quantitative. A beverage company reports annual water consumption of 10 million liters in a region that is facing water scarcity. If there's no water scarcity, it's not an issue. Due to high environmental sensitivity, the assurance provider sets a threshold of 1%. So when they check the actual water consumption, they found that this figure here is understated by 200,000 liters. But 200,000 is more than 1%. 1% of 10 million is 100,000. But they understated this figure here as 200,000, and you're lying. It could mislead regulators and local communities. Already they are facing water scarcity. How can you make use of the water to make profits when other people don't even have water? Another one, renewable energy usage. The company claims in their report 60% of the energy comes from renewable sources. And the assurance provider sets it at 3%, but the actual renewable energy usage is only 56%. So the difference between 60% of their claim and 56% of actual is 4 percentage points. You're only willing to tolerate a difference of 3%. So obviously this is material. Packaging is biodegradable. So it's the same thing as well. Now let's have a look at qualitative disclosures, their storytelling. Ensures that narrative disclosures are fair, balanced, free from bias and misleading statements. So a company stated that it is carbon neutral by 2030. Remember, the report will have financial materiality, impact materiality, but they also would have aim, strategy, targets, actions. Yeah. So here the company says, we'll be carbon neutral by 2030. But when you look at that, they may have an aim, they may have a target, but they don't have a strategy. They don't have any action plan. And that's bullshit, isn't it? So will this statement mislead shareholders? Yeah, it's a material misstatement. Would it create reputational, regulatory, and legal risk? Yeah, regulatory risk, especially if the disclosures are mandated, like in Europe, for example. But even if it's not mandated, would it create reputational risk? Yeah, because when stakeholders find out that you're bullshitting, there will be implications. Reputational damage is very strategic. If you lose your reputation, to try and get it back may take a massive PR strategy, and it will take time. Another story here. The company claims to have strong human rights policies, but then you fail to disclose your supply chain risk. I mean, if you say strong human rights, then there must be that policy or some kind of write-up about your supplier. You know, like in the Speedy question, they had that supplier called Duff, for example. So how can you claim to have a strong human rights policies when you don't disclose the risks elsewhere? So would this mislead stakeholders? Yeah. If you mislead, straight away material already. Would it create reputational, regulatory, and legal risk? Yeah. So if the answer is yes, material already. It's different from quantitative, where you have to set this one. Are we okay? All right, back to my diagram. Sustainability reports will contain the two major things, the double materiality and the aim, strategies, targets, and action. And that when it goes to the report, it will not go like this. It will be arranged according to your numerical and narrative statements. Now let's look at the assurance provider. Just now, what we did was we had a look at the bifurcated materiality for the quantitative disclosures and the qualitative disclosures. But let's come back here. You know this double materiality? As an assurance provider, we will also be looking at double materiality. Why do we need to use double materiality? To assess the completeness of the financial materiality and impact materiality, to make sure the company is not hiding stuff. You see, double materiality is about the cares and concerns about the stakeholders, either the investor or the environment or something like that, the cares and concerns. So what we're worried about is that the company, yes, that's your first step. Then they come down here. But what if when they came up with this, they conveniently hid away anything that was negative? So we can use that to double check against the cares and concerns of the stakeholders. And then turn around and say, hey, how come you did not consider, you're a beverage company. How come you did not consider the effect of water? It's not in your report. Did you conveniently miss that out? So we will be using the double materiality more to assess the completeness of this. Of course, when it goes into the report, it would look like this, but we want to make sure that they've covered all the cares and concerns. So double materiality belongs to the client, but we're also going to use it to see whether they have missed out anything, the completeness. Are we all right? So this quantitative disclosures and qualitative disclosures, all of this is called bifurcated materiality. It's more to assess their disclosures here. But we also make use of this. All right. So in your notes, it's got how does double materiality help us? From the double materiality, you know what are the cares and concerns, and from there you can see what's missing as well. Like, for example, if the car manufacturer here, they come up with the report. In the report, they talk about the recycling program. But when I'm looking at their double materiality, I'm saying, how come you missed out your emissions? Isn't emissions important for you? You're a car manufacturer. Who's going to drive your car? Ghosts? No, people. People are going to pour gas inside the car, unless, of course, it's an EV, an electric vehicle. So from the double materiality that the client has, when we look at it, we will know if they've missed out something. So in order to know whether they missed out something or not, it would be important for the assurance provider to be an expert, or experts need to be included within that assurance team. Otherwise, on our own, we may not be able to identify all the financial materiality that's been missed out, the impact materiality that's been missed out, conveniently missed out, so that they can look good. So you can read the rest of that notes there by yourself. I've given you a case study here that you can work with. And today's session is bringing everything together and just connecting the dots, because it's not a very easy topic, especially on the area of materiality, how the double materiality ties up with the work of the assurance provider. Yeah, the connection, like I was telling you a story. I was moving from sustainability report to sustainability assurance. And in our final diagram here, I linked everything together, and that makes it so clear for you. Double materiality is from the client's point of view, true, but we also use it. But for what purpose? But then we have got this red materiality. That one is more for identifying misstatements. Okay, so the final diagram puts everything together. So based on this, you have got a very good broad picture that no matter how the examiner is going to throw the question at you, you should be able to handle it seriously. Okay, so with that, we've finished